So, hi guys. Today we'll be talking about market structure. That's the in-depth of market structure. So the point is, if you don't understand market structure, you keep losing money, even if your analysis is good. Now, market structure is the backbone of um, of the market, the way the markets move, the way the smart money move the market. So basically, there are three types of movements in the markets. We have the uptrend movement, we have the downtrend movement, and we have the consolidation movement. Now, what is market structure? Like I said before, market structure is the way the movements move from a point to another point. Now, smart money uses to control the market, where you know who is in control of the market, either the buyers or the sellers. Now, like I said, there are three types of movements in the market, which is the up movement, the downward movement, and the consolidation movement. Now, in the up movement forms a structure called higher high and higher high, higher low, continue higher high, higher low. The point from the previous higher high to the next higher high is called a break of structure, because that means if the market move from one higher high to the next higher high, it's called a break of structure. Now to the downside, to the downtrend movement, whereby you see a lower low, a lower high. So the point whereby market move from the lower low to the next lower low is called a break of structure. Now market book structure to the what? To the downside. Now the next one is called the what? The consolidation movement, whereby we don't know who is in control, either the buyers or the sellers. Both of them are arguing where there is no what? No clear direction in the market. Now, smart money, as a smart money trader, smart money uses structure, this particular structure, to trap retail traders. That is um another thing to talk about. Like retail traders, who are the retail traders? The retail traders are you and I. And who are the smart money guys? The smart money are the what? Are the banks, the hedge funds, um, the etc. So if you want, we talk about the banks, the hedge funds, those who are the smart money, those who control the market, those who move the market. We'll talk about that one later. But basically, we're just talking about the way the smart money, right? That's the banks, the hedge funds, the way they move the market, because they are the one that actually move the market. They are the one with the big funds that actually what move the market. So now, we as a retail traders, if you don't understand the way the markets move, we just keep losing money to the market. So that's why I said we need to understand market structure. So what I'm going to be talking about again is, if you actually really want to know, um, if you really actually want to know how the traders move along with the big banks, like the hedge funds, like those who control the market, is whereby is still the same thing as using what understanding the market structure. The whole point still boils down to understanding market structure. So at the end of this video, I'll be dropping a, you can reach out to me, I'll be dropping a PDF that gives full breakdown of what of market structure, and how to know when the buyers are in control, or how to know when the sellers are in control, to get a perfect sniper entry. So, so in continuation of what what I'm saying, so if market is, there's something I would like to throw to you guys, what is called the change of character, to know if market is going to perform, because market does not move in one direction. Market moves in from one point to another. Now, let's say for instance, the market is giving us here an high, here, reversal a low, then broke this structure here, giving us another high, because this one becomes what our break of structure. This one becomes our break of structure. Then continue, we have another low. So the next thing is, market is meant to break the structure for an uptrend. But instead of market breaking the structure to an uptrend, market didn't break the structure, but market did this. Market did this. So at this point here, from this point to this point, is what we call the change of character. So let me state it out so you understand what I'm trying to say. So this is the point where we see a change in character, because what do we mean by a change in character? A potential reversal, where price is giving us series of higher low, higher high, higher low, higher high. So you know there should be a continuation like higher low, higher high, but no, market did what? Market now gave us a what? A lower high to a what? A lower low. So the point whereby market gives us a change in character. So this is the point. The market gives us a change of character, which signifies that which signifies that the sellers are actually now in control of the market. Now, so this all this now boils down to how markets moves. This is exactly how markets moves. So understanding understanding this particular structure, understanding just this structure gives you an upper edge on how to navigate the market. So I think I will be giving you a live example on how to spot a good clear market structure. So let's start by coming to this point here. So I'll be going to a lower time frame. So okay, let's use USD as an example now. Now clearly we can see that this market is creating an uptrend. Clearly you can see the market is creating an uptrend because this is a previous high and a previous low. Now if you see what market did here from this point to this point, market broke structure. Market broke structure to the upside. Now, so the next thing what are we waiting for? We are waiting for market to pull back to any of this zone here, then what continue to the upside. So now clearly we already understand that from the higher time frame, we already understand how markets move, because this is a clear example of a bullish structure whereby price move from one point to another. This is one point to another point. Then the price move upward, breaking what the previous high, which gives us a break of structure to the upside. Now the next thing we'll be looking for now is for price reversing back to any of this zone here, any of our zone, expecting this low. And even if price comes back like this and break this structure here, break this low here, that simply means we already have a change in character. So we already have a change in character, which we know that okay, at this point too, the sellers are already in control of the market. Then what we'll be waiting for? We'll be waiting for a pullback into any of this zone, then continue the movement to the what? To the downside. So this is basically the way price move. Same thing with same thing with how same thing with the downtrend, how the market move in downtrend. So this is it. This is a downtrend movement. So from one point to another, price broke structure to the downside. Now we are expecting price to pull back into any of this zone, then what? Continue its movement towards. Let me take this off. So we are expecting price to move to any of this zone, then what? Continue its movement to the downside to give us another break of structure. Then we move again, continue like that. That is the basic. That is all the whole point of market structure. This is exactly how markets really move. So now you might be wondering how we are going to know where price will react from. That is another topic for another day. But you can always reach out to me if you want to know exactly what point or what position or what to look out for to understand where price is going to be moving from one point to another. But this is just the backbone or the real details or the real movement of market and how the smart money actually move the forex industry. So I hope to see you guys in the next video. So if you want to learn more about forex trade, or you want to learn more about the direction of the market, you can always reach out to me because I'll be dropping the PDF file. So if you need the PDF file, can just reach out to me. So I'll drop the PDF file for you. Thank you guys.